These stocks are set to explode in 2026, so you might want to get in before it's too late. I'm talking about real estate stocks. Which ones? All of them. Okay, that sounded cool, but I really just mean the profitable ones with a positive PE ratio. I'm bullish on the entire stock market leading into next year, but I'm even more bullish on real estate stocks because of interest rates. I know interest rates are really high right now, but hear me out. It's not a surprise if I tell you that it's very hard to afford a home right now because of the elevated interest rates. There's a lot of people just not buying homes right now because it's really unaffordable. But don't take my word for it. Let's take a look at the data. According to Redfin, there were over 500,000 more home sellers than buyers, and the number of sellers hit a major milestone in May. Americans selling their homes hit the highest on record dating back to 2013. Now that record has just been shattered. Now let's correlate that into the stock market. If people just aren't buying as much right now, wouldn't that be bad for real estate stocks? Possibly, but I'm a value investor and I prefer to buy stocks when they're low. So let's dig further into interest rates. According to the CME Fed tool, as of right now, there's over a 90% chance of interest rate cuts at the next Federal Reserve meeting in September. And if they cut interest rates in September, another one is likely to come in October as well. It's also no surprise that the current administration desperately wants to cut interest rates as well. Every single day, the president talks about how bad of a job the Federal Reserve is doing and that they need to cut interest rates. He seriously talks about it every single day. Not only that, but there's a few things that are happening behind the scenes, like talks of a new executive order for no capital gains tax on home sales. I'm going to play a video of a reporter asking the president this question just a few weeks ago. Take a listen.
Yeah. We got no tax on tips, no tax on overtime, no tax on Social Security. How important is it we have no tax on home sales, capital gains, to unleash the housing market in this country?
Well, we're thinking about that, but would also unleash it just by lowering the interest rates. If the Fed would lower the rates, we wouldn't even have to do that. But we are thinking about no tax on capital gains on houses. And I'm very impressed that you asked that question because nobody knew that. How did you find that out?
So it's very apparent that he's trying to stimulate the housing market one way or another, but cutting interest rates is his primary goal. Now, I'm not just expecting 2 interest rate cuts by the end of the year, but I'm also expecting a lot more next year because Jerome Powell's term ends in May, and the president is looking to most likely appoint Scott Bessent to take his place. If it's not him, then it'll be someone else that has the same idea that the president has, and that is to cut interest rates. When they lower interest rates multiple times in the year, mortgage rates will go down as well. So I'm expecting the real estate market to boom, which will correlate directly with real estate stocks, also called REITs. By the way, most of them pay a very nice dividend, which is an added bonus. These are a few real estate stocks that I'm currently in, and here are my plans of what to do with them. Just a reminder to please like and subscribe because it makes the biggest difference for my small channel. I appreciate the support. Back to the video. First and foremost is Rocket Company, ticker symbol RKT. Rocket Company engages in the provision of a suite of services related to homeownership and other personal financial transactions. I actually loved Redfin at first, but then it ended up getting acquired by Rocket Companies. It's funny because I was buying Redfin throughout this year and I usually only buy stocks as they're dropping, and I dollar cost average my way in. While the week when the entire market was dropping, Redfin was dropping as well, so I bought a lot more and I ended up fulfilling my full size position, and I remember it like it was just yesterday. While the weekend came around and Monday morning, I woke up to one of the best news that I wish everybody can experience. It was acquired by Rocket Companies for $1.75 billion, and the stock went up close to 100% in a single day. So I had to take some profit, but I've been holding the rest of my position hoping that it'd drop back down so I could buy more, but it never really did. Now I'm not even half size of my usual position and I'm currently up $4,000 on it, which is nice, but hopefully it drops back down so I could buy more. Since my Redfin shares turned into RKT, I now have 554 shares for an average cost of $10.36. Let's pull up the chart. Right now it's sitting at around $17 a share, and I set my support levels, which I call buy zones, and the next one is at 16.3, then it goes to 15 and 14 and then 12.3 after that. I personally don't think that I'll buy more unless it drops back down to my 15 level, but that's because I'm already in. But let's look at the bigger picture. Back when the housing market was booming, which was back in 2021, RKT hit its all-time high of $40 a share, which is over 130% from where it's at right now. So it's still early. If the housing market goes crazy again, you could expect Rocket to take off, pun intended. Next is DR Horton, ticker symbol DHI. They engage in the construction and sales of single-family housing all across the US. The stock currently sits at $155 as of right now, but I bought this stock a few weeks ago. I'm currently sitting on 60 shares with an average cost of $145, and I'm hoping that it drops a bit more so I can buy more. But let's pull up the chart. Right now it's sitting just above my support level that I drew up at 154. I'm actually hoping that it drops more towards my other support levels, or what I call buy zones, but that's probably not going to happen. But either way, its all-time highs is at 199, which is close to a 30% gain from where it's at right now. But I'm actually looking for it to move even higher than that because its all-time highs was just last year, and during that time the housing market was not booming, to say the very least. So add this to your watch list and keep tabs on it. Remember, these aren't get-rich-quick plays. We want to slowly chip away at these stocks and dollar cost average in. The next one on my list is Prologis, ticker symbol PLD. It engages in providing logistics solutions and services. The real estate segment represents the ownership and development of operating properties and is the largest component of revenue and earnings. Let's pull up my position. I also have 60 shares for an average cost of close to $110. Right now it sits at 106, so I'm actually down on this position, but that's okay. I actually want it to drop much lower because I'm not even in on my full size position just yet. So here's the plan. I have a support level at 101. If it drops to that level again, I'll be buying more and most likely fulfilling my full size position. But look at this. Its all-time highs was at 174 back when the housing market was booming back in 2021. So I'll be looking for it to reach those levels if the housing market goes crazy once again. Which, if that happens, it'll be over a 60% gain from where it's at right now. But again, if you're looking to get rich quick, check out some other channels because they'll probably sell you hopes and dreams over there along with their course. We want wealth over here, and building wealth takes time, guys. The power of compounding and adding into your portfolio is very powerful. Keep adding into your position, and then you'll look up and see you doubled your money in no time. So add these stocks to your watch list or slowly get in while they're low and watch it compound over time. I'll continue to keep you posted as it all plays out, but I appreciate the support, and I'll see you on the next video.